You could have an average to below average business in terms of industry, but if you have a great management team, they can usually find a way to succeed. We're really in the people business, as I say, and hence again our name meaning with you, because for us it's all about people, it's all about relationships. We do lead with debt in our SBIC fund strategy. We're generally leverage lenders, but the irony is we're pretty conservative leverage lenders. There are certainly situations that might warrant more or less, but if we can stay within a 3 to 4 times total leverage deal, then to the extent additional capital is still needed to close a transaction, that usually needs to come in the form of equity. Even negative things can present themselves as opportunities to improve and reposition. But all that really needs to be vetted in the diligence process. I'm Stephen Jurgovits, managing and co-founding partner of Tacum Capital, private equity firm based here in Pittsburgh, Pennsylvania. We really have two dedicated strategies. One is our core strategy is an SBIC fund. We just finished raising our fourth SBIC licensed fund at about 340 million. The goal of that fund is to invest about 70% of it in the form of private credit, and that's usually in subordinated debt or mezzanine financing, and about 30% in the form of an equity co-invest alongside our debt. Most of our deals, about 90% of our deals, are with sponsors, and most of those, probably another 80%, are with what we call independent sponsors, and those might be individuals that have either private equity experience or operating experience that have an opportunity to acquire a company and need both financing and equity to acquire that business. So that is our core business, and we invest generally between $5 to $20 million per investment. We target companies with 3 to 10 of EBITDA, annual EBITDA, revenues from 10 to 100 million, and we're generally industry agnostic with some power alleys in precision manufacturing, value-added distribution, waste logistics, and food manufacturing, along with asset-light business services. Our secondary strategy is an equity control strategy, where we, in effect, will go out and acquire controlling interest in businesses. And in that platform, we raise money from family offices and institutional investors on a deal-by-deal basis.
Any particular example, how you transform business, how they grow? What is the process?
Yeah, sure. A lot of times founders and our management teams are comfortable getting a business to a certain level of performance. And usually, not always, but there's opportunities for additional growth via a capital infusion, perhaps taking on some debt to acquire another business, an ancillary business, a new line of business, or perhaps just some capital equipment for that next level of growth. But no matter what the situation that presents itself, our goal in evaluating an investment, particularly one in which we'll have equity, would involve some type of value creation plan. Good example is what's a recent deal we just did. So we got involved in a company back in Fund One. It's a founder family-owned business called Uncle Charlie Sausage based here in Western Pennsylvania. Longtime brand name, very familiar regional brand. And that's what we embarked on. One of the first deals we did in our first SBIC fund. So it's a little bit vintage in the fact that we did that back in 2014, but ultimately had a great outcome. We worked through some rebranding, some redistribution, and ultimately as COVID hit in 2020, like many food businesses, business spiked and we ended up exiting the business. And I think where we try to differentiate ourselves a little bit at Tacum Capital is the respect for that. We're really trying to harness and take whatever has been created in that business and that brand to date and hopefully help with the existing team and or supplement with new management to take it to the next level.
So what I'm in particular interested in and curious about, for sustainable growth, we have to be cautious about as far as I can understand, your business is all about sustainable growth, right? So you have major issue here. And it's like quick wins and quick results that are needed for everybody. We are cautious and we are aware of the long-term goals and nurturing relationship for long-term goals, long-term wins, which it's nothing else than essentially creates a focus. So in short term, a strategic goal is a long term, and there is no way any way out of that. So staying focused on that, and this basically, while you focus on that, you have to be delivering short-term wins, so everybody stay focused and engaged emotionally.
Absolutely. It's a value proposition. We have to pay attention in the short run, but these aren't publicly traded companies. And so we're not really worried about hitting earnings per se on a quarter to quarter basis. We're trying to make sure we stay at a good level of performance, but not afraid to make the additional investment or even pull back for that longer term growth initiative that will help drive that long term growth that you reference.
Give me an example. Tell me
Good
story.
example. Yeah, sure.
Human story, right? People.
Always good to have stories. Unfortunately, sometimes the negative stories pop into my head because you learn the most on those. But ultimately, we have a business that's in the distribution space. It's in Fund Two, and that is a company that was a really nice, steady Eddie business. But as COVID hit, it remained somewhat steady. And ultimately, we challenged our partners that, hey, look, this is going to be a great debt deal for us. But how are we going to make money in the equity? How are we going to grow this business? And ultimately, it took a number of strategic sessions to realize we had to go make some acquisitions that would put us into different verticals, albeit adjacent verticals,
Yeah.
that would create some new avenues for growth. And ultimately, we did that and came up with a really exciting acquisition that had exposure to aerospace. And at that point, we were able to bring in a larger private equity group alongside us to help both complete that acquisition. And now, what we've been working on the past 18 months or so since that acquisition is really the integration and the value creation plan to bring all these acquisitions together in one umbrella and start performing at a high level.
So, would you be able to give me a little bit more of the on the balance of debt and equity for growth, like an investment strategy? Can you give me a little bit
Sure, yeah. Yeah. I mean,
more granular, if you will, like a nitty-gritty about
yeah.
that?
Yeah, because we do lead with debt in our SBIC fund strategy. We're generally leverage lenders, but the irony is we're pretty conservative leverage lenders. There are certainly situations that might warrant more or less, but if we can stay within a 3 to 4 times total leverage deal, then to the extent additional capital is still needed to close a transaction, that usually needs to come in the form of equity. And so that's how we back into our overall structure, managing the debt load at close, understanding that we want to build in a margin of safety. The old Warren Buffett mantra for investing is, invest, but invest for a margin of safety because inevitably things can and will go wrong.
So, I think this will be my question that I have to ask. How do
Mm-hmm.
you evaluate brands? Like when company comes to you,
Mm-hmm.
they're all brands anyways, bad, good brands, whatever. You
Yeah.
mentioned all of that with the food company. How is that part of your investment and consideration? How do you evaluate the brand? How do you consider this? At that point of time, or merger and acquisition, those are complex
Mm-hmm.
transactions when two companies merge and they become something new. How do you
Sure.
consider brand from very much of your perspective, where brand fits?
Yeah, but we do a lot of business to business. So we invest in companies that are supplying products or services to other businesses, but that doesn't diminish the importance of a good brand. And really, we assess that through our sort of diligence on both the history of the company, the management of the company, but also the customers. We want to call customers. We want to talk to your largest customers. We want feedback direct as to how this particular company or potential investment for us is positioned in the marketplace. What do they do well? What do they need to improve upon? And then we can take some of the answers and triangulate that with some of the other due diligence information and make an assessment on where they are as a brand, what's their value proposition. And of course, it's not all bad. Even negative things can present themselves as opportunities to improve and reposition. But all that really needs to be vetted in the diligence process. Certainly, we've invested in some brands, some direct to consumer. We had a group of Anytime Fitness franchises, so we could very much evaluate the brand relative to the average customer or member in that case. Will vary by deal, but it's absolutely crucial. How is the business presented in the marketplace? And what I really like most about what we do is we invest in a lot of niche businesses. So not often are we investing in things that are hyper competitive where, you're winning on price or you're winning who's the lowest cost provider. There has to be some value added proposition. And what we found in studying our historical investments and those that have been the most successful are those businesses that have utilized some form of technology to create what we say is an unfair competitive advantage in the marketplace for their segment of the market. So they're doing something a little bit better than competitors to allow them to do that high-end customer service. Maybe it's quick turnaround. Maybe it is being able to be efficient enough to get higher margins but be price competitive. Maybe it's all the above. But those are the things we're looking for to assess as we evaluate the quote brand of a business within its niche marketplace.
Any story that way, sir? Or I can.
I got lots of
It,
stories. I should have brushed up on my stories prior
yeah.
to, but I'm also sensitive because we invest in a lot of privately held businesses and a lot of their stories aren't known to the vast public. We usually put and have historically posted our investments on our website. So I would encourage anybody to look through there
Yeah.
and look at some of the individual companies and industries. But ultimately, if we're doing the assessment up front and we're buying into a good brand, a good example as a company we have invested in Fund 2 called Gilman Cheese. Lo and behold, a cheese manufacturing business in Wisconsin, as shocking as that may be, but really a great business. It's tough because you've got some commodity exposure that needs to be managed, but if you can do that well and be efficient, you can create a quality product that can go out in the marketplace, both this in this case the wholesalers, also schools, other end customers that they have, that's very attractive. And they subsequently made an accretive acquisition, and so the business is done very well in the way it's positioned the marketplace. And our involvement along with our sponsor there was really just trying to get the right management team to keep that going in place and be more efficient as we bought out, sort of a family founder in that situation. So that's a good example. One other one's a company we're no longer involved with. It's changed its name, but the original name was Bolts and Nuts. Literally, the company distributed bolts and nuts, a value-added distribution business to end manufacturers where they basically housed and handled the different bolts and nuts that go into a manufacturing process with on-time and real-time, just-in-time delivery system. A very simple business, but yet one that was branded simple, but they really won through customer service. Part of their challenge was doing that well, but also doing it efficiently because, as you can all imagine, we can all imagine, bolts and nuts are not a very high margin business. So if you're selling those, there's definitely risk from commodity pricing and from international sales and things of that nature. So you have to do it well and you have to be efficient. And then you call yourself Bolts and Nuts and let everybody know what you do. Great story. Again, great management teams. I think if there's one other common thread to our successful investments, it's good management teams. You can have a great business, but if it has lousy management, that could cause problems. And you could have an average to below average business in terms of industry, but if you have a great management team, they can usually find a way to succeed. We're really in the people business, as I say, and hence again our name meaning with you, because for us it's all about people, it's all about relationships.
So how do you choose? How do you help with the management? You're a financial institution and you don't really, or you do, or so how do you get involved into management change?
Yeah, no, I should be clear. Like, we don't run the companies, right? And
Yeah.
particularly as a more of a financing partner than a true equity buyout firm. We're not even selecting leadership in some cases. What we're really hoping to do is partnering with existing and competent management and help them take it to the next level. And we think we do a pretty good job, certainly not perfect, in assessing management, its capabilities and weaknesses. And usually in our deals, we're putting together a board of advisors or a board of directors, more likely, And a lot of these companies have really never had boards before because we're first institutional capital, first institutional reporting requirements. And so that board, which would consist of us and perhaps our sponsored partners, as well as perhaps a seller or management, will make group decisions at a strategic level in terms of evaluating the needs and the resources of the business and particularly the people side. And that's usually at the executive level, right? My view in the world is that a good investor, a good board of director selects and supports good management teams and then lets them go do the hiring and do the processes that they need to be successful.
I really thank you for all these. That was a brief and amazing. Thank you. Thank you for all your thoughts and the time,
I
obviously.
appreciate the opportunity to speak with you. It's been great to get to know you, and hopefully you get to know us a little better and what we're doing, and particularly in those situations where, again, family founder-owned businesses are facing succession in a complicated world, usually need a partner to help them through that, and we like to believe we're one of the ones they should talk to. So we thank you for the opportunity to share those stories.
Thank you. Thank you.